Happy Friday, everybody. Ben Grosco here with Integrated Wealth. Figured we shout out to you this morning and just give you really a state of the market, where everything's at. A lot of volatility going on, a lot of uncertainty, a lot of fear. Everybody's watching the news and seeing what's going on overseas, inflation. We're going to go through a few key factors that are driving this volatility in the market. Going to share with you what we're doing here at our office as you watch and manage your portfolio and what the outlook looks like. 1 month, 2 months, a year ahead. So if you look at the state of the market, a couple key drivers, obviously what's driving volatility is the Russia-Ukraine. Okay, it's scary. We're all watching it. It's really, really sad to see exactly what's going on over there. The thought of a nuclear war, just the unrest in Europe is really a big driver on all of this volatility. We now have, inflation, 7.9%, a 40-year high. We're all paying more at the pump. We're all paying more for groceries. Where is it going? Is it going to go higher because of the war in Ukraine? That is another driver of what's causing tons of volatility in the market. Commodities, oil and wheat, 15 and 14-year high. Hopefully, the government and the administration can somehow figure out how in the world we can get our gas prices down. Oil is the lifeblood of our economy. If we're paying more for gas, we're paying more for groceries, and it just trickles down to every one of us, which is really hurting. If you're retired and on a fixed income, you're paying more for everything. So it is a scary time, and that is causing volatility. Interest rate hikes. We've been talking about this for about a year. Send some things out in our quarterly newsletters that we send out. But interest rate hikes are typically hearing that they may increase next week. Okay, to curb inflation. Not sure with everything going on overseas if they will even do an interest rate hike, but that could cause fear in the market and cause the market to be even more volatile. Okay, so where are we at today? The S&P 500 year to date is down about 12%. The Nasdaq's down about 18%, and the Dow is down about 10%. Collectively, the market as a whole, if you add all these together, is down about 13%. So where does your portfolio stack up to with the market? What we're seeing on an average portfolio at our office, most people are in a balanced type position. Now, for the younger investor, they may have a little more risk, and you may have a little, maybe watching today, and you may be very conservative and not have as a risky as a portfolio. But as a whole, what we're seeing, market down, overall down 13%. Our portfolios are down around 5 to 7%. Okay, relatively speaking. Okay, now when you think of what's in your portfolio, obviously Fidelity, where all your funds and ETFs and stocks are, is where you're seeing the up and down. Now, a lot of you that work with us have a foundation in place, right? You have part of your assets that are protected by any downturns in the market. We use that for income. We use that to protect principal. A lot of you folks have that. It is an integral part of your investment strategy. As you are in retirement, having a piece of your portfolio that is protected is very, very good in times like these. And if we look at the averages for people that have those in place, your portfolio is down between 3 and 5%. Portfolio activity from day to day. A lot of clients ask us, what are you doing with times like this? Well, first of all, typically we never sell, right? It's hard to time the market twice. If you got to time it when you sell, you got to time it when you get back in. So it's hard. Okay, but rest assured, inside your portfolio and the funds that you have, there is day-to-day buying and selling inside the funds. Not particularly on the Fidelity level where you see buys and sells, but inside the funds, there are portfolio managers that we have chosen that are buying and selling stocks to increase, the growth in your portfolio. Last but not least, tactical management. As we watch this market, as we watch your portfolios, one thing to keep in mind. And we feel like the market is going to make a turn and kind of level out, we may change your portfolio position to capture some of the upside of the market. So stay tuned for that. Okay. And last but not least, if you have any concerns, if you have any questions, you want to know where you stack up when it comes to your portfolio. Okay. Give us a call, 330-896-1644. Email us. We're all going to be here. We're all watching and looking forward to seeing you soon. Thanks so much.